Welcome to Houston Real Estate Radio. I'm your host, Shannon Register, and every week we bring you news and information you can use on your next real estate transaction. Today, we're taking a look back at 2015. Now that we're at the end of the year, want to take a look at 2015, what's happened this year with the economy, with housing, with buying, with selling, and we're going to answer that big question for you. Is now the best time to buy a house? We believe it is. We're going to tell you why. And later in the show, we've got some great things planned for you. If you've got a real estate question, call in your real estate questions. We'll answer them right here on the air every week. And if you miss any of today's show, if you're just tuning in, you missed any of the show, catch us online at HoustonRealEstateRadio.com. This segment, I've got in Scott Davis here in the studio. He's been on the show before. He's the regional director for Metro Study for the Houston market. And he always has a lot of great information. We've told you before what Metro Study does, but just as a reminder, I'm going to let you start with that, Scott. Just remind our listeners what Metro Study does.
Sure, Shannon, great. Happy to do that, and thanks for the opportunity to come talk to your listeners today. Metro Study is the largest provider of real estate research information in the country. We work with most of the major builders and developers and lenders, and we go out and physically survey every active subdivision in the market. We drive about 10 to 12,000 miles a quarter, getting eyes on every lot and house under development. So we get a very good feel for the pace of sales and building in the Houston market. So
you're not just analyzing data. You have boots on the ground, and you are looking to really know what's going on with our economy and our housing market.
Absolutely. We do primary research.
All right, so let's talk about what you're finding. Scott Davis has over 15 years of residential and commercial real estate industry experience in the Houston area. He's worked with land, retail, residential office, industrial, and multi-family use. So lots of background on him. He's also the author of 2 books dealing with generational conflict and is widely sought after as an expert on the impact of changing generations in the workforce. And because of that, I'm going to ask him a question about baby boomers. So if you're a baby boomer, you definitely don't want to miss that. But let's start talking about the economy a little bit. New construction. Right now it's December, and December is always a really big month for us because home buyers want to close by December 31st so they can get homestead exemption next year. But we have seen, I know with my company, we have agents all over the city, and we've seen a slowdown in the market. So what are you seeing? What's happening?
Shannon, we're definitely seeing a slowdown in the market too. We deal primarily on the new side with our builders, and on the new side of the market, we've seen about a 10 to 12% slowdown in starts.
Okay.
Our closings have been fairly flat on a year-over-year basis, so they've remained pretty steady. But a lot of those builders report they had what we call a significant backlog, which those are buyers who have contracts but haven't closed yet. And so they've been selling to those buyers. Going forward, I think we'll see that slow down even more as we finish the year and towards the beginning of 2016.
What's causing that slowdown? Is it the new CFPB regulation and changes with the Tilla Respa stuff, or is it the oil and gas industry that's caused layoffs and things? What do you think is the major shift causing the slowdown in new home starts?
Well, I think there's 2 factors. Obviously, the effect of oil on the economy and the job cuts that we've seen are a factor. Also, if you've gone and looked at houses recently, you've probably, particularly if you're a native Houstonian, had some sticker shock. We've seen some pretty significant price appreciation, and I think that's been even more important than the slowdown in energy.
So let's talk about price appreciation, and here's why I tell buyers. People ask me all the time, is now the best time to buy? Should I sell now, later? Was now and right now, to me, right now, is the best time to buy. And that's because housing prices continue to go up. They continue to go up. That's why I bought another house this year and sold, because housing prices are not going to go down again unless something major happens. I mean, I think that prices are just going to continue to appreciate.
Absolutely. You run the risk of sounding like a broken record when you say now is always the best time to buy. But you look at right now, we still have very tight levels of inventory. So, we were looking at prices going up 10, 15% a year. That's the kind of thing we saw in Las Vegas and California in the previous decade. We've never seen anything like that here in Houston. They're taking a pause, so we've slowed down a little bit, but they still continue to go up. And the other factor, as you well know, is mortgage rates remain historically low.
They got to go up some point.
We're likely to see them go up. We believe the Fed's going to raise rates in December. Yeah. We've already seen them go up about 50 basis points this year, and that's a pretty important point too when you consider how you're going to afford that house.
Let's talk about the points increasing. We had a little conversation about that before. Talk to me about that, because I know you and I were talking before the show about $50 a month can be the difference between being able to own a home and not qualifying to own a home. And $50 a month, you and I know, is a family dinner out, or a tank of gas in a lot of today's vehicles. $50 a month, I mean, that seems unreasonable that $50 a month could price you out of the home buying market.
It really is incredible. I mean, I've got 2 kids. You can spend $50 taking your family to the movie.
Yeah,
by the time you get drinks and popcorn. So, but we've looked at it at the kinds of loans that you can get today at today's interest rates. At 4.25%, which is roughly where we are today, versus 4.5%, which is a pretty modest increase in interest rates. The difference in that payment is only about $50 a month, that $50 we were talking about, but that prices 13,000 households in the Houston market out of being able to buy a home. So it really is important.
That's
as you
a lot
know,
of people.
It's a lot of people that. It ends up being almost 2% of the households who are in the Houston area. So, one of our recommendations to buyers, and we think now into the first of the year is going to be a very, very good time to look at buying a home, to make sure that their expenses and balance sheets are cleaned up when they go in to get that loan.
So is it safe to say that 2% of consumers in Houston who could afford a home this year will not be able to afford a home next year?
I'd say it's very likely.
That's terrible. And it's because of a $50 payment difference.
Because of a $50 payment difference.
Wow. See, that's why y'all got to buy now. That's why I keep telling them, buy now.
Absolutely. We already expect the Federal Reserve to raise rates in December. We're at almost 80 months into this expansion. That's almost twice the average expansion since World War II. They're going to start raising rates. And you see the impact that will have on your ability to buy a home. So get in now before that happens.
And people, I know I have a lot of buyers who couldn't find what they wanted. Well, now we're starting to see more inventory. So not only can you probably find what you want now, or at least more likely to find it than you were last year when inventory was so low, but now's the best time, because next year you may not be able to afford it. You might be able to find it and not afford it then.
Absolutely. And just like Shannon, you mentioned buyers want to have that closing by year end to get the homestead exemption next year. Similarly, those builders, they don't want to pay taxes on that inventory. And so
better deals.
I think you'll be able to find better deals coming into the end of the year than if you wait.
Yeah. All right. Let's talk a little bit about rental properties. Rental rates were just going up and up and up and up and up. Do you think those have kind of flatlined? Are we going to kind of, I guess, is it going to stop going up?
I don't know if it'll stop going up. It's definitely slowed. Okay. One of the things that people didn't really think about is, in addition to building a lot of apartments, we were tearing down a lot of older apartments too.
Yeah.
So that's part of why it stayed so tight. And when you look at our Class B and C apartments, which are typically maybe the 15 and 20-year-old apartments and older, something like 2/3 of that rental housing stock in Houston was completely full for over a year. And that's why that's been so competitive. We're seeing that start to loosen up. And I think by the middle of next year, renters may start to see some relief on that monthly rent.
Okay, here's the baby boomer question I want to ask you. I see a lot of baby boomers who want to change housing. You know, they already own a house. They want to move to kind of their retirement home, their last and final home that they're going to purchase. And one of the tools that I think is the best tool a lot of them can use is that HECM for purchase, which is basically a reverse mortgage.
Right.
And I've shown it to many baby boomers, and they're all afraid of it. I've not seen one that embraced it yet. They're all afraid of it. And that is a tool that would work so beautifully for some people. I've actually had someone just make the decision. He wanted to work another 5 years to save another, few $1,000s to afford the house he wanted, instead of using that type of mortgage. Would you recommend this product?
We would. I think it's a good product. It's a good way to capture some of that equity you're expecting in your home. And bottom line, even with the slowdown, we're still seeing home prices increase. And so the risk for somebody in terms of pricing going down are very, very minimal. I think it's a safe product. It's a good way to take advantage of those retirement years when you're still healthy and active.
Yeah, I agree. I think I've seen many people. It's not a good fit for some people,
Sure.
but for some baby boomers, it is a great fit, and they can get more home that they want. They can go up in price point instead of using all their cash, draining their bank account.
Absolutely.
And so I've seen it be a great product for people, and I'd like to see more people using it. But I just find that a lot of people are really scared of it.
They should find out about it, get educated, but don't lose out on opportunities.
All right, sounds good. Scott Davis with Metro Studies, the regional director for the Houston market, bringing us lots of great information as we complete the year of 2015 and head into 2016. We'll be right back here on Houston Real Estate Radio after a word from our sponsors. If you missed any of today's show, you can catch us online at HoustonRealEstateRadio.com.